Hi everyone, welcome and thank you for joining us tonight. This session is brought to you by Bursa Malaysia and managed by LifeChamp. My name is Atira and I'll be your moderator for today's session. Our topic tonight is comprehensive Islamic financial planning and wealth growth. Now, if you are a Muslim investor, I am very sure you have asked yourself, how can I grow my wealth while staying true to my faith? Should I go for a long-term investment or is it better to have more balanced approach that still align with Islamic values? It's not just about growing your money, it's also about making sure your financial journey is guided by Sharia principles. What happens if an investment seems profitable but involve elements of riba and gharar? How do you tell if something is really halal or not? These are the kinds of questions that we'll be exploring tonight. Before we start, just a quick disclaimer. Everything shared in this session is for educational purpose only. Nothing here should be taken as direct advice to buy or sell any securities. Please always do your own search before making any investment decision. Now, let me introduce our guest speaker, Mr. Faiz Wahab. He is a financial planner representative licensed by Securities Commission Malaysia and also a financial advisor representative recognized by Bank Negara Malaysia. He active in the industry, a member of a Malaysia Financial Planning Council and also a HRDF certified trainer. Besides being a financial planner, he also an experienced trader and investor in the Malaysian stock market. Mr. Faiz hold both a bachelor's in education and a master's in business administration. He also provides stock advisory services covering areas like stock, rates, and ETFs. Now, we are really honored to have him with us tonight. Let's give a warm welcome to Mr. Faiz. Hi, Mr. Faiz. How are
Assalamualaikum.
you? Waalaikumsalam. So I will pass this to you, okay?
Okay, sure. Right. Thank you for that very brief introduction about me. So can I share about my slide?
Yes, you can.
Okay, assalamualaikum and very good day to everyone. Okay, so there are few things that I will share with you for today's session. Okay, for our topic today, there are a few things that we need to cover. The first part is the fundamental or the financial planning itself. I believe our viewers are Muslim and also non-Muslim, so these are applicable for both Muslim and also non-Muslim. But I will put more emphasis on the um, Sharia point of view, Sharia perspective. So maybe some of you can take it um, as a Muslim, but as a non-Muslim, you also can practice whatever that I want to share for tonight's session. Okay, because the financial planning part, most of the things remain the same, but for some with some additional part that focus for Muslim only. Right. Next thing is the stages of financial planning in terms of Sharia point of view and also in terms of the Islamic point of view itself, right? So this we will emphasize on the Sharia perspective and also the how the religion itself guide you to make a better financial decision because some of the investors they are taking the religion as a decision, but um, the right point of view that you need to think is the religious part is guiding you to make a better and also uh, an informed decision. Okay, because the 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 religion it give you a clearer guidance for you to make your financial decision. All right. Next thing is we need to understand what are activities uh, that are not allowed by the Sharia point of view. Okay, so there are a few activities such as gambling, such as riba, such as unclear contracts. So these all um, activities that are not allowed. Okay, we need to understand why these activities is not allowed. Okay, in terms of the morality, in terms of Sharia point of view, and also it helps us. Okay, it helps us to be a better person itself, right? And also, okay, last but not least, we need to know, okay, we will dig deeper on what are the instruments that are available to us. Okay, when you're talking about Sharia compliant instrument or Sharia compliant securities or stocks, okay, this is not um, only can be invested by a Muslim. Okay, this are the thing that I want to emphasize. As a Muslim, you need to to comply with the Sharia law. Okay, but for non-Muslim, you also can opt to invest in such as manner. Okay, because right now we have uh very beautiful framework to to let us to invest in. Okay, because you need to understand this. Okay, we have this traditional or conventional way of investing. Okay, and also we are moving towards a better investment school of thought or methodology, which we has the ESG, where an instrument need to comply with the ESG uh, requirement. Okay, so if you are not familiar with the term ESG, ESG is stands for environmental, social responsibility, and legal, and also governance. All right. So this is very popular school of thought of investing, because we need to understand when we invest our money into a project or into a company, we need to know that this not only give us a financial gain, it's not just giving a capital gain, but we need to understand that this investment means more than that, right? So when we're talking about more than that, it's not just the monetary value that we are looking for, but we need to look at in terms of the way beyond that. Okay, right. So that's the ESG school of thought. And then we have this Sharia point of view, Sharia investing school of thought. And also, these are being implemented by a lot of my friends, even though they are not Muslim, but they implement this kind of investing methodology, because it it just not about thinking about the monetary value of investing. Yes, we need the return. Okay, we are talking about the return um, that's applicable to any school of thought for investing, right? But we need to understand that what are the social aspect that we are looking at. Okay, how an investment can make a better way of life, okay, can make better future for our children and our grandchildren. As we know, we are having these global warming issues, and so global warming, and also we have these food issues. All right, so these all are contributed by human activities. So we as a human, okay, we as a human, we need to understand that our investment not just giving us a decent return, but also contribute to a better way of life, right? So that's the thing that we want to look at as investor itself, right? So we need to understand the fundamental principles of financial planning. We need to understand there are a few things that we need to consider when we doing investing. Okay, so investing is part of the financial planning itself, but for for the whole financial planning itself, it resolves around these principles. There are a few principles that we are looking out for. Okay, the first one is we are looking for the concept of compounding return. If you are not familiar with this term compounding return, what does it mean? Okay, it means that for, for example, let's say I have this 100 ringgit. I do invest my money for 100 ringgit. Then I get 10% of return. Okay, so it gives me 10 ringgit. Okay, for 10% of return. All right. So the next year, okay, my capital, this 10 ringgit of return is added back to my original investment capital. Okay, and it become 110 ringgit. Okay, 110 ringgit. So the capital for the second year is 110 ringgit. It's not one 100 ringgit anymore. Okay. And the third year, when we're talking about that third year, we give that 10% from the 110. So I get 11 ringgit in terms of return. Right. So it it is added back to my original capital, investment capital. So from 110 ringgit, okay, it becomes 121 ringgit. Okay. So the idea for compounding return, whatever return that you get is being added back to your original investment or the capital itself. It is different from a simple return because when you're talking about simple return, let's say I put 100 ringgit, I get 10%, which is 10 ringgit. The next year, my investment capital starts with 100 ringgit back. Okay, so that's the idea for simple return. But for the compounding return, okay, for the compounding return, your investment capital is growing bigger and bigger every time. Okay. And when talking about compounding return, we are looking into two variables. Okay. I'm not trying to show talk about the formula itself. Okay. You can look at for the formula in any investment book, or in fact you can Google for the formula itself, right? But the things that, or the variable that we need to focus on, there are two parts. Okay, for us to to have uh, a higher, okay, a higher investment return. Okay, so the two variables is time and also the return for investment, right? So there are few things that you can alter and also you can change, okay, to make you to have a better return. Okay, so let's say you go for seminars or classes, you become a better investor, you become a wiser investor, that can slightly improve your investment return, right? So if you have a higher investment return, so let's say Mr. A is having 6% and Mr. B is having 8% in terms of investment return, then obviously Mr. B are uh, having, okay, the final amount higher than Mr. A. But when you're talking about increasing the investment return, it also means that you are exposing your assets into a higher risk. Okay, when you're talking about return, we cannot just looking into return per se, but it also comes with a higher risk. Okay, as we know, the higher the risk, technically we will get the higher return. But the right way for you to think is that, okay, for a higher return, you need to expose your uh, assets into a higher risk, right? So let's say you are we're talking about, let's say you invest in a more defensive portfolio. Okay. So maybe you go for balance fund or balance portfolio. Okay, so maybe you're talking about 6%, okay, of return. But when we are talking about more aggressive portfolio, okay, then we are looking for 8, 10, or 15% of investment return, but you need to expose into much higher risk. And as we know, the current global investment temperature is not that very uh, good right now, okay, because we are talking about there's a war, there is trade war, and also there are few economics things that are happening in terms of the global point of view, right? So it may concern some of you, okay, to expose to a higher risk, right? So maybe you want to take a safer measure, right? So that give us a restriction on what to play around. But okay, but what are more important? Okay, this is uh the key for me. This is the main thing that we need to understand when we're talking about the compounding return. The variable, the most important variable that you cannot change, and also that playing a vital role in terms of our um, investment future, is that the time element or the time variable. Okay, because as we understand, when you invest a longer period of time, okay, it gives us much significant investment return. Okay, let's say we are talking about a person invests for 10 years and a person invests for 20 years. Okay, it is obviously, okay, for this person who invests in for 20 years having, if not double, it may more than that. Okay, more than that. And why I need to emphasize on this thing is because for amount of investment return, you can change your portfolio. Okay, you can change your portfolio. You can expose your portfolio into a more aggressive portfolio, and you're taking a higher risk. But when talking about time, you cannot change your time. Okay, because let's say you already passed. Let's say you are 30 right now. Okay, you cannot get back to the age of 20. Okay, and as we know, as we growing older, we have a higher commitment. We have lower risk appetite. Okay, and we also need to secure for our retirement time. Okay, when we are bound to the retirement time, okay, then the amount of risk that we can take also very limited. Okay, unless you can work after you are 55 or 60, you have the planning, you want to work, you want to extend your working age, then that's a slightly different story. Okay, but most of us, we want to retire at 50 or 55. For some people, they may think about retiring much earlier. Okay, 40 or 45, they want to retire early. Then you have to start investing now. Okay, because time plays a vital role. Okay, in fact, for most of my clients, I do suggest, for them to start investing for their kids, right? As early as 6 months or 1 year, okay, you need to start growing their investment capital so that, okay, at the age of 18 or 20, they have a good fund to help them to uh, build their investment capital for the future. All right. So time plays a vital role and you cannot change time unless what you can do is you start investing now, because even though we're talking about, right, it's better late than never. Okay, it's very important. Okay, it's very important. It is better for you to start tomorrow than you starting way day after that. Okay, right. So for us to make for me to show you an example for compounding return and how it plays, right? So let's say you have these two situations. Okay, you are given the first option is that you get 10 cents, okay, but it double for every day for the next 25 days. And also you get this 1 million ringgit, okay, you get this 1 million ringgit, and this 1 million ringgit will sit there, okay, and will not compound or doing anything for the next 25 days, right? So most of us will tend to choose this 1 million ringgit, okay, because yeah, obviously 1 million ringgit suddenly bank into your bank account, right? So it it give us very big smile. Okay, it give us very big smile, and this is more lucrative, okay, compared to this 10 cent. Okay, but we need to understand the power of compounding effect. Okay, how this 10 cents works for the next 25 days. So when we run the scenario, okay, for in the right column, okay, we have this 1 million. Okay, after 25 days, okay, if you are not spending this 1 million, okay, then the 1 million will sit or will remain for 1 million ringgit. But for 10 cents, it get double every day. Okay, from 10 cent to 20 to 40 cent, 80 cent. It's not that lucrative yet. Okay, but when looking at the end results, okay, at the end result after 25 days, okay, from 800,000 ringgit, it become 1.6 million. All right. So this is why, okay, this is why compounding is very, very, uh, is playing very, very crucial in terms of your financial planning and also your investment planning. All right. So that's why you need to start early. Okay, earlier starting will give you a better uh final results. Okay, all right. So this is how the compounding effects play vital role in our investment planning. All right. So this is the graphical visualization, okay, for compounding return. Right. If you are looking into the charts, right, it become exponential near to the end of our investment. Okay, for the few years, we cannot see any significant changes for our investment, but due to the end, okay, it will grow exponentially. Okay, when I'm talking about investing, I always using this durian tree um, situation. All right. So when you're talking about planting a durian tree, okay, for the first uh 3 to 4 years, you still cannot eat durian, okay, because right now we have this durian season, okay, we have this durian season, right? For the first 3 to 4 years, you cannot eat any musang king yet. Okay, let's say you are planting musang king in your land, okay. So you still cannot in your farm, right? Okay, you having this musang king farm. So after 5 years, then only you start to take some fruits, okay. But after 10 years, okay, your investment start ripe the fruit, okay. So you can eat very much amount of musang king, okay, after 10 years, all right. And the good thing is that even though you are eating this musang king each and every year, okay, it's still giving you decent amount of fruits every year. And also, this musang king can be eat by your children and also your grandchildren, okay, if they did not change the tree, okay. Right now we have this musangki. Maybe in future we have another variation. So we need to do the replanting. That's a different story. But if we are talking about you keep the same tree for the next 20 years, your next generation still can eat this musang king uh, fruit. Right? Okay. So let us give to for us to have a better understanding about compounding return. Okay, I was talking about the time factor. Okay, before. Okay, so we have these two guys. Okay, Mr. Ironman. Okay, Mr. Ironman save after the first 10 years. Okay, in 30 years. So basically, Mr. Ironman, he save his money for 20 years, okay, because after 10 years only he start his saving or investing, right? But Mr. Captain America, okay, he only save for the first 10 years. The rest of the years he did nothing. Okay, because yeah, we know this the backstory of Iron Man and also Captain America. Okay, Captain America, he was working as a military guy back then. Okay, then he can save his money. Okay, he able to save his money. Okay, until he was frozen in the iceberg. Okay, so after 10 years, he working as a military guy, then he get frozen in the iceberg and he cannot save his money anymore. But for Mr. Tony Stark, okay, Mr. Iron Man, uh, he live in wealth and he think, oh, I don't have any needs to invest, or I don't have the needs to save my money. Okay, only after he being captured, then only he realized, oh, okay, I need to build some of my saving or investment fund, okay, to for my future. So this is what happened to these two fellas, right? So we're not talking about Mr. Tony Stark. Let's say he saved his money 100 ringgit per month. So every year he can save about 1,200 ringgit. Okay, so at the age of 30, he start his saving. Okay, at the age of 50, okay, at the age of 50, he only has 47,000 ringgit. Okay, he been saving his money for 20 years. Okay, but okay, his total capital being injected is about 24,000. So he get about 47,000, right? Whereas when you're talking about the Captain America, okay, he only saved for half of what Mr. Tony Stark been saved. Okay, so So he only inject capital for amount of 12,000 ringgit instead of 24,000. Okay, but he start early. Okay, he starts early. Even though, right, even though he just saved for 10 years, whereas Mr. Tony Stark saved for 20 years. Okay, but Mr. Captain America start early. Okay, at the age of 20, he start his saving. Okay, he save for 100 ringgit per month for the rest of 10 years. Okay, the total capital injected is 12,000 ringgit. Okay, at the age of 50 ringgit, sorry, at the age of 50, okay, he has about 53,000 ringgit, where he has a higher, higher, uh, higher investment return compared that Mr. Tony Stark. That's why I say earlier, okay, and what I want to emphasize on this thing is you need to start earlier. Okay, the best time for you to start is the earlier as you can. Okay, as early as you can. If you invest early, then you can have a better chance or a better investment return. Okay, that's why I already say that invest as early as you can, because as we know, when we're talking about these two scenario, okay, Captain America did much better uh return compared to Mr. Tony Stark. Right. So when you're talking about investment and financial planning, uh, the other thing that, or the other uh fundamental factor that we need to understand is the inflation factor. So as we know, okay, when we're talking about inflation, when we are talking about, we are having much uh, lower or weaker purchasing power. Let's say we're talking about the last 10 years, okay, when we go to a supermarket with 50 ringgit, okay, we can buy a full of trolley. Okay, but right now when we're talking about 50 ringgit, when going to the supermarket, okay, we cannot get even half of the trolley. Okay, because our purchasing power is getting smaller. Okay, that's why you need to beat this inflation. Okay, so that your capital are protected. Okay, at least your capital are protected, or even better, your capital is growing much higher rate compared to in the inflation. Okay, when talking about inflation, we can talk about the headline inflation rate, which is 3%. Okay, when you're talking about the inflation, right? Inflation. So your investment return needs to grow much higher than 3%. Okay, but when talking about a specific investment plan, okay, we're talking about, for let's say, for educational purpose or healthcare purpose, the inflation rate might be different. Okay, for education, we are talking about more than 7 to 8%. You need to beat that. Okay, uh, for our healthcare, it much higher uh inflation rate that we need to focus on. But when talking about general inflation, okay, we are looking about more than 3 or more than 4%. Um, for a Muslim, okay, you also need to consider the zakat portion, okay, because despite of on top of inflation, you also need to consider about zakat payment. Okay, you need to uh, have an additional 2.5%. Okay, so let's say we're talking about inflation 3% and your zakat 2.5%. So you need your okay, you need your investment return to make much more than 5.5%. Okay, we add 3 to 2.5, so you need to beat this 5.5%. Okay, in terms of the investment return. Okay, so inflation in play. Okay, let's say if you are not familiar with inflation, so these are two scenario, two same products. Okay, from similar company. Okay, in 2013, this combo, two pieces of chicken, you get drinks, and also you get a wages. Okay, it's 8 ringgit and 95 cents. Okay, in 2019, the same product or the same set, okay, you need to pay for 14 ringgit and 20 cents. Okay, and we're talking about 2025, the price will be much higher compared to 2013 and 2019. This is what inflation does. Okay, because inflation literally burns our money. All right, so we need to beat the inflation. Right. So let's say we're talking about $10,000 10,000 ringgit. Okay, let's say you put your money just into your saving account where you get about 0.1%, or some might give you 1%, or you just put your money in your uh, rooster fund, or you put under your bed, or you put in your safety deposit, right? So this 10 ringgit will lose its value. Okay, it lose its value over time. We're talking about the purchasing power, right? But if you put this 10,000 ringgit, okay, into a very uh safe uh investment fund, okay, let's say we're talking about 3 to 4%, okay, so your investment or your purchasing power will keep remain intact. Okay, all right, so that's why, okay, you need to beat the inflation. All right, so we're looking into the what are the stages of the Islamic wealth management. Okay, for especially for a Muslim, you need to know what are things that you need to look for when talking about wealth management. Right. So what difference between the Islamic wealth management and also the conventional one? Okay. Um, the Islamic wealth management is not only about you creating your money, how you protect, also how you keep accumulating your wealth, okay, up until the distribution of wealth. Okay, some of the conventional one, they also need focusing on the wealth creation, wealth protection, wealth accumulation, and also wealth distribution. But what makes is distinguished between the Islamic point of view and also the conventional one is the wealth purification part. Okay, so wealth purification is the thing that uh, we need to do. Okay, we need to uh, we are obliged. Okay, as a Muslim, okay, you are obliged to do the wealth purification. When we're talking about wealth purification, there are two parts of wealth purification. The first part is you are giving out to the poor, okay, to those who needs to be helped. Okay, we're talking about poor people, those who are not that fortunate. Okay, right. So you need, okay, you are obliged to pay for your zakat. Yeah. So but this model or this concept is being uh uh also being adopted by uh the conventional one, where people giving money to those needs, okay, the prisoner of war and so on. But in Islam, okay, in Islam, this is an obligation. Okay, this is an obligation. For a conventional one, that's an option. Okay, but for us Muslim, this is an obligation. We need to help those who in needs. All right. All right. So the second part for the wealth purification, we are talking about um the you purifying your wealth that that you obtain from non-permissible activities. Okay, so you need to dispose uh, those investment that you put in non-Sharia investment. Okay, for example, okay, let's say you have this one investment in a tobacco company, right? So we know in Islam it is prohibited for uh, us to um, involve in tobacco business. So let's say you have uh, your investment in tobacco company, then you need to purify or you need to cleanse. Okay, you cleanse the amount of capital gain from this investment, right? So there are a few methods, okay, that you can do, okay. So you can go to start to help you on how you want to purify your wealth. All right. So when talking about wealth creation, okay, this is the important part. The first and the first part, okay, for wealth management is wealth creation, where you create your wealth. Okay, so let's say you get your wealth from salary or businesses or trading. Okay, so whatever activity that you are doing it daily to get payment. All right, so you can be salary person, you can get it from royalty, you can get it for from businesses. So that's how you create your wealth. And after you are creating your wealth, okay, you need to protect whatever you have. Okay, you need to protect whatever you have. Okay, let's say you have a piece of land. Okay, you already acquire a piece of land. Okay, you already have the land. The first thing before you start planting any durian tree or you want uh to build a farm or you want to raise a cattle, right? So whatever things you want to do with this piece of land, okay, the first thing you need to do is you need to protect this land. Okay, so let's say we want to protect our land, then we need to build fences around this land, right? So the same things about our wealth, okay, we also need to protect our wealth. So there are things that we need to consider. What are the risks that you are exposed to, and how you can manage this risk? Is either you want to mitigate the risk or you want to share the risk, or whatever the uh, risk planning activities that you can do to help you to protect your wealth. Okay, let's say I put it in example. Okay, let's say what are the biggest thing that can affect how you create your money. Okay, let's say you are a salaried person or you are a business owner. Okay, if you cannot work, okay, if you cannot work, then your salary or your business cannot run, right? So that's why you need to protect your wealth, okay, during this hard time. Okay, let's say you're getting sick, so how you want to pay for your medical bill, so how you want to pay for your expenses during, let's say you are bedridden for or you need to get medical treatment, okay, for let's say 3 to 4 months. So how you want to protect your capital during this time? Okay, so these are wealth protection part that you need to focus on. Next is the wealth accumulation. Then let's say you have this amount of money, okay, you are getting paid, let's say 10,000 ringgit, okay. So your salary is 10,000 ringgit, then you already spend for your house, your car, your child, and so on and so forth. Okay, this extra money, okay, you start to accumulating. Okay, that's what we're talking about investing, saving, and so on. Okay, and when talking about the wealth distribution part, okay, when the wealth distribution part is how you want to distribute after you are not here anymore. Okay, we're talking about the situation. Let's say you want to build a legacy. Okay, let's say you already you already accumulated about 5 million ringgit. How you want to uh to distribute the 5 million ringgit to your next of kin. Okay, when talking about the wealth distribution concept, okay, it's either you want to build a foundation, okay, and so on. So, also you want to give directly uh, distributed, okay, among your spouses and your kids. Okay, it's your choice. But when talking about Sharia point of view or the Islamic way or Islamic thinking, okay, this what I want to emphasize of building a wakaf foundation or wakaf fund. Okay, so let's say you have this 5 million ringgit. Okay, you distribute 4 million ringgit to your next of kin. 1 million ringgit or one part of uh, your total assets. Okay, for a Muslim, you can goes up to 1/3 of your uh, total assets. Okay, that's the maximum that you are allowed to give for charity. You can give for wakaf. Okay, so wakaf is very interesting topic that you can dig deeper. Okay, where it is unlimited. Okay, unlimited um good deeds that you can do. Okay, you can go for wakaf project for let's say food securities. You can go for healthcare healthcare provider, and also you can do a lot of good things with the wakaf fund. Okay, you can go for wakaf fund. All right, so we're talking about the wealth creation. Okay, wealth creation part. Okay, I don't want to go very deep for each and every element, but I want to go for the first part when talking about the cash flow. Right. So it's very important for us to manage our cash flow. It's not necessarily you get a better salary, you can save more. I have been seeing people with 20,000 ringgit, 25,000 ringgit per month. Okay, they cannot save single cent. All right. In fact, they spend more than that. Okay. Okay. So they are heavily indebted. All right. So the cash flow management is not about how much you get, but how much you manage whatever you get. Okay. So the cash flow concept, we have this surplus, equilibrium, and the deficit. All right. So in the deficit, okay, let's say you get 10,000 ringgit in terms of salary, but you are spending more than that. Okay. So this is becoming a deficit, right? So equilibrium, whatever you have, you just spend all of it, right? And the surplus, okay, surplus is the best thing, and this is um most of us should be attain this surplus, right? Then only you have a good financial management, right? A better surplus, it give you a better investing opportunity. All right. So the cash flow management, this is the concept that we've been taught for very long time, okay, where you have how much your income minus your expenses, then that's the rest is your saving. Okay, so let's say you have 10,000 ringgit in terms of income, you spend for 9,000 ringgit, then you have additional of 1,000 ringgit for your saving. But I think this concept is quite um, quite not very accurate. Okay, and uh, Quran itself, it teach us a better way. Okay, Quran teach us a better way for our cash flow management, right? So instead of income minus your expenses, you need to save first, right? So let's say you have 10,000 ringgit, you need to know how much you need to save. Then only you have the rest is your expenses. Okay, by doing this, you can limit, okay, how much you will spending every month. Let's say I need to spend about 1,500 ringgit every month. Okay, so from this 10,000, I save 1,500. Okay, the 8,500, I will manage however uh I need to do it. Okay. And this is being taught, okay, in the Quran itself, in the Surah Yusuf, verse 47 to 48. Okay. Allah Subhanahu wa Ta'ala already teach us that, okay, whatever you harvest, okay, okay, Allah teaches whatever you harvest, leave it in its spikes, except a little from it which you will eat. Okay, the Quran already teach us the best way to manage our cash flows, right? So that's how you need to do it, right? So we need to look into what are activities that are allowed and what activities are prohibited in the Sharia wealth management. So we have this usury, riba. Okay, you have this riba, right? Okay, we have this riba element. Okay, there are a lot of there are two types of riba that you need to understand. But I think the most we are more familiar with. Okay, let's say I borrow 1,000 ringgit, then I have to pay, let's say, 1,200 ringgit. So that's considered as riba, and that's not allowed in Sharia point of view. And also, we also cannot have a transaction in a uncertain transaction. Suku is not riba. Okay, suku is allowed in Islam. Okay, because there's a different way you do the transaction. All right. So uncertain transaction, uncertain agreement. Okay, let's say I buy A, I may get B, I may get C, so it's not clear contract, so it is not allowed. Okay, gambling also is not allowed. Okay, frauding is not allowed, and also buying and selling illegal goods. Okay, so this the illegal goods are classed into two. One is not allowed by the law. Okay, and also it's not allowed by the Sharia point of view. Okay, let's say we are talking about tobacco. Tobacco is allowed by our government, right? But it's prohibited by the Sharia. So tobacco is prohibited activities for Islam. Defense stocks like weapon manufacturer company, yes, yes, yes. Okay, why buying defense stocks is not Sharia compliant? Okay, because when we're talking about weaponry, okay, weapon company, okay, is about killing people. All right, it's about killing people. The only things you want to do is buying heavy machinery, having weaponry, okay, if is to kill people. And in terms of Sharia point of view, okay, killing people is something prohibited, and uh, it's not in line with the maqasid of Sharia. So that's why, okay, investing in uh, manufacture weapon manufacturing company is not allowed. Okay, you are only allowed to buy weapon to protect yourself, right? But it's not something for you to invest in, right? So there's different things. Okay, you are allowed to defend yourself, but you are not allowed to invest in those companies. Okay, because it's about taking other people's life. Okay, in terms of marketing and Sharia, we want to preserve the harmony. We want to have this peace thing. So yeah, it's not what we want to do, okay, unless for defending yourself. That's the difference. That's the difference. Sorry. Okay, so when talking about Sharia compliant instrument, okay, there are a few options that we have. Okay, we can buy directly businesses. Okay, let's say you want to buy energy company. Okay, you can buy Tenaga Nasional, you can buy YTL Power. Okay, um, let's say you want to buy retail company, you can buy Eon, you can buy Padini. Okay, also FNB, there are a lot of FNB that are listed in Bursa Malaysia. Okay, also we have these technology companies. Okay, um, and so on and so forth. We have very about 1,000 companies that are listed in Bursa Malaysia. So there are a lot of varieties that we can choose from. Okay, you want to buy a hospital, also are listed in our Bursa Malaysia. All right. So next one is we also can buy Islamic ETF. Okay. We can also buy Islamic ETF. So it gives us a better option. Okay, we will go for ETF in detail after this. Okay, and also we can option for REITs. What are REITs? REITs are for real investment. Okay, investment trust. Okay, so how is the Sharia process being done? Okay, so a company, okay, they will go to the security commission for this screening process. Okay, so they need to pass this four criteria. Okay, then only they get the Sharia compliant. If they fail any one of it, okay, they will directly classify as Sharia non-compliant securities. Okay, in terms of the new landscape for investors, okay, who are looking for full-fledged Sharia compliant securities. Before this, we only have this half of the process complied with the Sharia. Okay, where only you have this conventional deposit account. Okay, conventional trading account. Okay, it's subjected to interest. Okay, so that's prohibited in Islam. So right now we have the full-fledged Islamic landscape where uh, the the your deposit, okay, are Sharia compliant. Your securities that you are buying are also Sharia compliant. Your trading, clearing, deposit, and also settlement are Sharia compliant. It's full-fledged, okay, from end to end. So give a better option for a Muslim to invest in. All right. So what are the Islamic brokers that are listed? So you can look for. All right. So when talking about um companies that are listed in Bursa Malaysia, okay, we have almost 81% that are Sharia compliant, only 19% that are not Sharia compliant. Okay, so you will have this majority of the shares are Sharia compliant. So as a Muslim, it is a must for you to invest in Sharia companies. Okay, you cannot having this ruksa and so on. Okay, so there are no exceptions. Okay, for you to buy a non-Sharia securities. So it is must for a Muslim to buy Sharia compliant securities. Okay, but for non-Muslim, you can opt to invest in non-Sharia or Sharia. Okay, no problem. Okay, it's not necessarily means that Sharia companies only um for Muslim only. Okay, for non-Muslim also can buy Sharia or non-Sharia compliant securities. Okay, so what are equity markets? Okay, or what are share markets? Okay, so basically, we as investor we buy a part or a portion of the companies. Okay, so you are technically owning the companies. So let's say the companies giving making a better profit, so they give out dividend to you. Okay, so that's what you are looking for when you are investing in the companies, right? So you also can get a capital gain. Let's say this company remain profitable, they do not issue any dividend for you, okay, but you still can get uh, uh, a profit from the capital gain. Let's say you buy this stock for 1 ringgit, okay, and you can sell it, okay, after let's say 2 years or 3 years, okay, for uh 2 ringgit and 50 cents. So it's already double your investment. Okay. Right. So that's what we are looking when talking about the equity market. Okay. But what for the ETF? So when you are talking about investing in one particular stocks, you whatever happened to that particular stocks, that then you are directly hit by it. Okay, let's say the company make a decent profit, then you have a decent profit also. But what if the company having a very significant loss? Okay, then your portfolio also will be directly hit by it. But the better option for this one, okay, when we're talking about different strategies. Okay, you can opt for ETF. So ETF is a basket of companies or stocks, right? So let's say you have this company A, B, C, and D. Okay, so let's say company A is not making money, but B, C, and D is still making money. So your portfolio having a better chances to do well. Okay, unless the whole basket is not doing well, then you cannot do anything. Okay, but usually when talking about ETF, okay, one company may be go wrong, but the others remain still intact. So it gives us a better chance, okay, for us to diversify our portfolio. Okay. Um the buying and selling process is same like stock, so it much easier for us to handle our portfolio. Okay, so let's say we are talking about this EQ8 Dow Jones US 1350 ETF. So this company, this ETF gives us the opportunity to invest in the US stocks. We have this Apple, Nvidia, Microsoft, Amazon, Meta, which is the Facebook and Instagram, Alphabet, which is the Google, Eli Lilly, Broadcom, and also Tesla. All right, so if you want to invest in the US stock market, you can go directly to the US stock market, or you can have a better option. You just buy this ETF, and you have this uh, better way to diversify your portfolio. Okay, for the REITs, okay, we're talking about companies before, but right now for REITs, what we are looking into uh, buying asset management companies. All right. So when investor invest in REITs, okay, then this asset management company, they will manage the assets. Okay. When they get the rental income, they collect the rental income from their tenant. Okay, and they will distribute, okay, whatever portion of the profit, okay, to all their investors. Okay, so maybe you are looking for more defensive portfolio or strategy, then you may opt for REITs. Okay. So for example, we have this KLCC REITs. Okay. So what is the portfolio under KLCC REITs? So it is the Petronas Twin Tower, Menara uh, 3. Okay. The third tower also under its portfolio, and also the ExxonMobil Tower. Okay. Under the KLCC REITs. So what are, you need to understand what are the portfolio or the asset under management for each and every REITs. So maybe you go for retail, shopping mall, also, or you can go for warehouse, okay, or you can opt for hospital, okay. So there are a lot of REITs that are listed in Bursa Malaysia. Okay, when talking about the Sharia investing, people are very pessimist. They want to know is either this Sharia investing or Sharia school of thought of investing, is this school of thought can make money or not, right? Because that's the main question that people will ask, right? Because at the end of the day, okay, at the end of the day, what matters for us is we want to make money, right? So when we are talking about these two indices, we have this FBM-KLCI, the blue line, and also we have the FBM Sharia Index. When we are talking about these two index, okay, these two indices, the FBM-KLCI, the blue one, okay, compared to the FBM Sharia, okay, over the time, um, okay, over the time, okay, the FBM Sharia is performing much better compared to the FBM KLCI. Okay, so from this comparison, okay, from this comparison, we can freely to say that, okay, you still can make money, okay, because people are thinking, oh, there are so much restriction now, can make money or not, okay. Yes, you still can make money, okay, provided, okay, you are buying the right stocks, okay. Because even though we are talking about these indices, okay, this indices, the FBM Sharia is outperform the FBM KSI itself, okay. If you're buying bad stocks or you're buying the wrong stocks, then it's a bad investment decision. Okay. So you need to do your due diligence. You need to do your study, okay, to choose a right stock so that you don't pick a bad apple, right? So that's the thing that you need to understand when talking about the Sharia investing. Overall, when talking about the overall performance, okay, yes, we can say it is outperforming the FAMKSCI, but you need to find the right stocks, okay. It doesn't mean that you are promises 100% or guaranteed profit. No, okay, there's no such thing as guaranteed profit, okay, but you are having a better option. Okay, but if your performance is weaker, then you need to revisit, okay, your investment strategy. Maybe you need to do extra work, okay, to study the fundamental of the companies, and so on and so forth. Okay, so it's you need to upgrade your knowledge lah. Okay, right. So I think we already come to our Q&A session. So I think we have few questions here. Okay, we have few questions here. Okay, I think
Yeah. Can you see my slide?
your slide. Okay,
Can you see my slide? The Q&A slide.
yeah.
Okay. Yeah, I would like to thank Mr. Faiz for the insightful sharing. So, currently we're moving for the Q&A session. So, for those who have a question, feel free to type them into the Q&A box, and I will read them out for our speaker to answer. So, right now I see the question. So, she asked, "Is suku is riba?"
Okay, I think I already answered or in my presentation before. Okay, so suku is a different instrument. Okay, I already shared about the share market. Already shared about the ETF and also the REITs. Okay, but suku is another instrument that we can buy and sell in the platform. Okay, so when talking about suku, okay, suku is different from bond itself. Okay, the concept of suku may be similar to this bond itself. Okay, but it has a different transaction. Okay, different type of transaction. Okay, it's not about buying and lending money. Okay, but you are sorry, it's not about lending money, okay, but it's about buying and selling an assets. Okay, so in term of Sharia point of view, okay, suku are permissible and it's not considered as riba. Right?
Okay, the next one is FBM. FBM Shariah consists of top 30 Shariah stock.
There are a few Sharia indices, okay, um that we have. Okay, it is a thematic indices. Okay, it is thematic indices. Okay, so the Amal Sharia. Okay, so we have this Amal Sharia, we have this mid cap Sharia, we have this small Sharia index. So you need to understand which Sharia indices that you are looking for. Let's say for the Amal Sharia index, it compromise the constituent from the uh, Bursa Malaysia Emas indices. Okay, right? So, but it only compromise of Sharia compliant securities only. Okay, so that's the difference between the if you have this the Emas Sharia, we have the all those companies in the sorry, in the Emas index. Okay, we have all those companies top 100. Okay, top 100 Sharia index. Okay, but for the Emas Sharia index, okay, from these 100 companies, okay, they only choose uh companies that are categorized as Sharia compliant. Okay, so that's the difference between the Emas index and also Emas Sharia index. Okay, when talking about the mid cap index and mid cap Sharia index, so mid cap comprise of mid cap companies. Okay, when where the mid cap Sharia index, okay, it compromise of Sharia compliant securities that uh, categorized as Sharia compliant. That same goes for the uh, small cap index and also small cap Sharia index. Right? Okay.
Okay, the next one is a warrant in Malaysia halal.
Okay. So warrant. Okay, warrant is a derivative products for the equity market. Okay, right. So we need to understand what are warrants. Okay, so warrants are derivative from a share or stocks, right? So if the mother stocks is Sharia compliant, okay, then the warrant itself, okay, of the mother share is Sharia compliant. But if the mother stocks is not Sharia compliant, then the derivative or the warrant itself is not Sharia compliant. But we also need to understand, okay, there are warrant from the stocks and also warrant issued by the banks. So warrant issued by the banks is not Sharia compliant, but warrants issued by the company is Sharia compliant. So you need to understand if the warrant is WA, okay, WA, WB, okay. If the mother stocks is Sharia compliant, then the warrant is Sharia compliant. But it is under C category, so it's not Sharia compliant.
Okay, the next one is if I want to invest in the foreign market, how to know if the stock is a Sharia?
Okay,
Shar mm,
right. So in the foreign market, so we are talking about maybe some people are looking for US market. We have also this Chinese market, okay, Singapore market. Okay, so there's a lot of options there. One of the thing is that you can directly access the market, and also you can indirectly access the market. So I give you some example. Um, let's say you want to indirectly access into the US market, you can have this uh, Islamic ETF, okay, as I showed before, the Islamic uh, EQ8, right? Okay, the EQ8 US Titan 50, okay, you don't really need to go, you don't really need to hassle to think about, oh, is this Sharia or not? Is this Sharia or not? Okay, so you just invest in this EQ8 US Titan 50, then it's already compromised of 50 Sharia compliant securities. Okay, that's the easier way to do that. Okay, but if you want to directly involve in the market, okay, let's say you want to go to US market or Singapore market or China market, okay, or Indian market or whatsoever market that you want to go, then you need to go and extensive research. Okay, you need to look at what are the Sharia screening methodology that available to that kind of market. I believe for the US market, you can go for the Dow Jones or Sharia screening. In fact, Dow Jones already has this uh, Sharia screening methodology. Okay, um, so I think for US market, that's not a big problem. Okay, because you can look for few types of screening methodology that are available. But if you are looking when we're talking about uh, other market, okay, so you need to know what are the uh, uh, companies that give you this Sharia screening um, for you. Okay, so not every market having this uh, Sharia screening. Okay, so if you want to go to other market, then it's quite challenging lah. It's quite challenging unless you have that resource. So my take is that, okay, you have Malaysian market. So Malaysian market, we already developed our Sharia screening methodology. So it's very clear cut. If you want to go to US, you can go directly or indirectly. If you want to go indirectly, you can use our ETF. If you want to go directly, then you can go for uh, Sharia screening companies that are giving you those report. Other than that market, then you have to do it yourself, right?
okay. The next one is sometimes people feel like Islamic financial products have a lower returns than conventional ones. So how do you respond to that from your perspective?
I think I already explained before. Okay, when I do the comparison between the FBM Sharia Index and also the KLCI Index, um, we can see, okay, we can see the Sharia Index outperforming those KLCI Index. So for me, when you looking into the right perspective, then you can get the answer. Okay, maybe you're comparing one or two particular stocks, okay? A stocks to B stocks. This one is Sharia, this one is not Sharia. Then you might see this stocks is outperforming these stocks. But when talking about the whole market itself, okay, we can see that the Sharia index outperform those FBM KLCI. In fact, okay, when we do very very specific time frame, especially when we're talking about the COVID time, okay, during those COVID time, okay, the Sharia index remain resilient. That's the thing that you need to understand, that the Sharia index remain resilient compared to the FBMKSCI during the COVID time. Okay, so I've been monitoring this data for I think since 2018. Okay, since 2018, and we can see over the time. Okay, most of the time it is outperforming, and during the COVID time, okay, we can see it remain resilient. So I think the data speak for itself. Right.
Okay, the last one is, could you explain how to prepare a proper Islamic estate plan that ensures wealth is distributed fairly and in line with Faraid?
Okay, so for estate planning or estate management, so you need I cannot give you a very specific um or detailed instruction on how you to do it, because we need to look at what are the family structures, okay, what are your interests, okay, what you want to do with your wealth. Okay, so there are a few things that we need to consider. So from your family structure, okay, because we know the Faraid law it give priority to those men, okay, those men compared to the female. But if we're talking about uh estate management, it's not about Faraid per se. We need to understand, okay, there are portions that maybe you want to go for charity, okay. So when talking about wealth distribution, people always thinking, oh, Faraid, Faraid, Faraid. You also need to understand what are your debts, okay, how you manage to your debts, okay. So let's say I die today, okay, I have my house loan, I has my car loan, I has my educational loan, okay, and also other loans that I need to serve. So how my asset can can settle all those loans, and then only we talking about what are the charity that I want to give. Okay, let's say I want to give for a hemodialysis center. Okay, or I want to do wakaf, or I want to do sadaqah. And also talking about wealth distribution, you need also to take about the haji portion. Okay, as a Muslim, doing hajj is compulsory. Okay, provided you have the wealth. Okay, maybe you have the money, but you still not getting the turn. So let's say you adapt you pass away. Okay, you pass away, so you still need to settle your hajj portion. So only after that, okay, we are talking about how to distribute your money. Okay, we're talking about how to you want to give hiba, how you want to give wasiat. Okay, let's say you want to write a will. Okay, there's no problem. You want to write a will. Okay, then only we're talking about the faraid. So there are a lot of things that's you need to consider, okay, when talking about the estate planning. Okay, so I think you need to engage a financial planner or estate management company, okay, for you to help with a proper uh, estate management. Okay, but I can lay out a few things that you need to consider when you're talking about estate planning. Yeah.
Okay, that's all for today. I would like to thank you again for Mr. Faiz for answering all the questions and sharing your knowledge. And to all of you, thank you for being such an engaging audience. I hope